Offshore. Navpreet Singh, CFO of Dolphin Offshore, now joins us on the phone line. Mr. Singh, good morning. So if you could tell us about this contract that you've entered with Paxocean, if you could take us through the contours of the two deal and how is this going to help you?
Good morning. We signed a contract with the Paxocean group for building of two ships last week, and these ships will be delivered to us in about 22 months and 24 months, respectively. The ships are basically larger versions and more technically advanced versions of vessels that we already have in our fleet. One is a 400-man DP3 accommodation work barge, which makes it about one of only 4 or 5 of such barges in the world today. And the second is a multi-purpose offshore construction vessel with accommodation for 150 passengers.
Okay. Mr. Singh, what has been the total payout for these two vessels, and what would your capacity now stand at?
Well, as a company, we currently own 10 vessels. So with these two vessels coming into the fleet 2 years from now, it'll go up to 12 vessels. In terms of the capex payout, it'll be approximately about $70 million US.
70 billion US dollars.
70 million.
Oh, million US dollars.
Yes.
Okay.
Okay, Mr. Singh, last quarter was not good for you. What's the outlook for the rest of the financial year?
Well, second quarter is generally a poor quarter as well because of the monsoon season in terms of the offshore EPC work. But our marine activities has been continuously doing well, and that will remain much the situation going forward from here.
With this payout of $70 million, what will the balance sheet look like now in terms of debt as well as cash, if any?
Well, the major payouts will only take place on the delivery of the vessels. So for the next 2 years, we are still pretty much a long-term debt-free company. We have some working capital in the parent company. The subsidiary company where these vessels are being bought is currently a totally debt-free company. And the loan drawdown will really take place 2 years from now when the vessels are delivered. So there will not be much change to the balance sheet in that context.
Okay. Do you generate any operating cash flows which will be used for the $70 million, or the entire funding will be done via loans?
Well, 85% is funded by the banks, 15% is funded from internal resources. But generally what we need to invest will be about $11 million, which is less than 1 year's cash accruals.
All right, Mr. Singh, we'll leave it at that. Thanks so much for joining in. And